Hello everybody and welcome back to another Financial Market FX Setup video edition. My name is still Daniel Geitsch from good old Germany on Sunday the 13th October 2013 at 14 o'clock 25 Central European Time. I want to give you my last Financial Market FX Setup video. Give you my last Financial Market FX Setup video. In the future, I will only create technical analysis setups, even because I don't have simply the time in the week to create more than one free daily video setup. So stay online with me, in contact with me on YouTube, Twitter, StockTwits, and on my blog. I will, while Wall Street trading session, upload one free daily video. Okay, today in the last Financial Market FX Setup, I have a big surprise or a big, even a big correlation financial market setup. Here the S&P 500 index and the S&P Financial Sector index. Here the interesting point is following stuff. We see here the S&P stuff, high 2010, lows 2002, highs 2007, lows 2009, and here even highs 2013. The S&P, the financial sector lag a little bit behind here until 2003, then 2003 and the bull market 2007 also got here great upside trend and a massive sharp ratio here fall here even 2007, 8 and 9 financial sector from 33 until 5. So very sharp fall and a very good recovery even since 2009 to 2013. Meanwhile, to $20. The S&P index falls from 1500 to around about 650. And recover to, meanwhile, 1,650, so 1,000 points, round about more than 100%. And if you get here a relative chart, even in percent, we see here from the highs, $33. If you buy the S&P ETF, SDR financial select sector, here from $33 down to $5 and meanwhile to $20 roundabout. These are, if you want more, roundabout 400% from the lows. So very high beta, high correlation, and high, how do you say in English? An option if you want here. If you want the financial sector, even an option on the S&P 500 index. Here we can see the development a little bit better. In green, red, the S&P index. In sky blue and deep blue, the financial selector SPDR ETF. And we see here relative in logarithm chart, yes, relative performance here the development. Interesting point, or why I'm choosing choosing this chart is following stuff. Look at this, the highest 2000 and the highest 2007 in the S&P. We created this year here very good space here above the highest 2000 above the highest from 2000 2007, very good space. So that could be also a good setup here into year end or next year in the equities. And also if you're bullish in equities, I am right here right now in October 2013, the financial sector would be even a greater high beta option if you want. So, okay, here the S&P index, and here with the financial sector SPDR. Okay, stay with me. This video is a little bit longer than the usual ones. Is, as I said, my last financial market FX setup. So in the next minutes, I will give you an concrete technical analysis about the S&P index and about the financial a financial sector. So stay with me and enjoy the video. Enjoy my video. Okay, traders. So let's get a view about the financial sector. Okay, here we are. Here we go. All-time chart. And here we see in the financial select sector SPDR in the XLF. The high were by $33.19 and the lows even by a little bit above 5. So very straight fall while throughout the crisis. So, and here. And the interesting point is here the lows at $5.80 and here the lows 2011 at $11.39. So, and if we paint here an extended right line, we see here a great upside trend even since 2009. So, all in all, the financial select sector is even something like an option on the equity index if you want from the lows 2009 round about 5 to 20 round about 400% value. So and the big setup is, in my opinion, this year. Here we see the highs 2000 after the lows 2009, 2010, 2011 and 2012, always a little bit higher than last year before. And this year here exact come down here exact here the highs 2012 were on 2012. Then we get here a little bit lower and then we see here 2013 prices above 2012. A great upside trend. So all in all, I would still prefer the long side in the financial select sector SPDR XLF. Here we see the two basic upside trends: first trading day and February lows, and February lows and April lows. Here evidence in June, August and this month. Start of the week we break here down. On Wednesday I've got the idea to create here this financial market setup. And we see here on Thursday and Friday we came proudly back, but I would still prefer the long side, even also in lower areas. The interesting point of view is, my opinion, following stuff here. We see the bulls. We've got first trading day, the lowest price this year, and then here we see here February got a low, 2 months later April low, 2 months later June low, August and October also low. So great upside trend. On another side, the bears. Here February high, low, new high. April high, new low, and new high in May. And here May high, June low, July high, August low, September high, October low, and maybe new highs here in November. So if the trend continues, but all in all, a very good upside trend. I see no reason to buy financial shares, but I wouldn't buy it here in the upside trend. So even if the financial shares fall 2-3 days, then I would proudly buy back. Proud back, yes. And here I'm painting here two lines. The highs of this year 20.84, and here the high in May by 20.18. All in all, I would still prefer the long side. We closed on weekend on Friday at 20.20 US dollar and 31 cents. So I would take a stop here at $18. $18. These are $2.31 under Friday closed, weekend closed, 11%, 11.37% of the weekend close, and the stop is even round about this big upside trend from 2009. So all in all, if we buy, you can buy here around about 20, take a big large stop at 18, and even for trade for new highs into 2013 in the financial sector. But stay cautious, stay aware. This is an option sign. If the equity falls, the financial sector should or would fall heavier than the other sectors. As I say, is even something like an option or a high beta correlated index in relationship to the S&P index, of course. Okay, trader. The question, of course, is how will the S&P develop next year? So here, by the way, both indexes, once again, here all-time high, 2000 lows, lows, highs. Here the financial sector, and let's get a view about the S&P index for itself. Here we've got the important thing on the big picture of until the end of this year and into next year is, in my opinion, following stuff. Here I'm painting red line highs of 2000 at 1552, 1550 roundabout, and here at 1575, 76 exactly, here the yellow line. So prices above are in the big picture, in my opinion, still bullish, and should, if as long as we trade here above these both lines, I see no reason to sell on the long term shares, even financial shares. Here, let's zoom a little bit. Here, the development of 2013. We see here until first trading day was also here was also the lowest. So with the opening on 2nd January 2013 at 1426.19, we gained in the S&P index. Here once again we will see it better. Here the lows first trading day and the lows here in June. This is, in my opinion, the major trend. Here the lows in June, even between high of 2007 and high of 2000. Great technical setup. And if we create an extended line, we see here on Wednesday, that was second reason or second explanation signal setup here for me to produce here this video for you. Here we created also here this great turnaround. So all in all, a great bullish scenario, bullish setup for the S&P index, but don't get nervous if we break here down. So there should be a good opportunity to buy S&P even into next year. So technicals, some levels. Here the high in April, high in May, high in July, and high in September. So, and to create here technical, purely technical setup, we see here we've got a classical A, B, C, D, E, F, G, and H should be even new highs. So we're creating here also B was higher than A, C was higher than A, D also higher than B, C, E also higher than C and lower than B. Classical wave A, B, C, D, E, F, G, and H should be realized until the end of the year. So, okay, how to trade? Here support, we've got also support in the SMA. If you want here 200 SMA, interesting is we break here also 200 above the highs of 2000 and 2007 first in history, and we've got here support on the 20 20 or 100 SMA, 100 SMA. So all in all, great setup. 100 SMA here, June, August, and October. Always 2 months later. Here we've got here the support. Maybe in December, here or here, if we break here down this upside trend, I would not buy at once, maybe wait a little bit and then buy S&P shares once again, or even the index or the future, however you want. Yeah, the question is, of course, how to trade, how to make money. We closed on weekend on 1703.20. I would create a stop even at least at 1552. These are 150 points. Under weekend close, 8.83%, or even 2007 highs, yellow line, 1576.09. These are 127 points, or even 7.45% under weekend close. So all in all, great setup, great picture in the S&P and also in the finance sector. All in all, once again, I would prefer the long side into year end and next year in the S&P and in the financial, in the S&P and here in the financial select sector. So here, yes. So yeah, that's all. That's all in this video. S&P index, S&P 500 index, and S&P ETF financial select sector. I would prefer the long side as levels, as I said before. I wish you a great morning, great day, or great night, whenever you're watching my financial market FX setups. This is or was the last financial market setup. In the future, while Wall Street session, I will upload every trading day and technical analysis setup. So have a great morning, day or night, whenever you're watching my setups. And stay online, connected with me via YouTube, Twitter, StockTwits, and my blog. Bye bye, guys.